Inside a modern digital infrastructure facility, tens of thousands of specialized computers run 24 hours a day, drawing massive amounts of industrial power. This chart tracks hash price, the revenue a miner earns for a specific unit of computing power. You can see how a consistent increase in Bitcoin's network difficulty has compressed that hash price down to a 5-year low. That margin compression has a direct physical consequence. Older hardware, like the legacy S19-era ASICs that dominate many facilities, now cost more in electricity to run than they actually generate in Bitcoin. HIVE Digital Technologies is particularly exposed to this shift. As a major green energy miner, they entered this period holding a significant inventory of these now obsolete machines. Surviving this market shift requires HIVE to change how they calculate the value of a single megawatt of electricity. Outside of the crypto sector, the broader technology market is experiencing a massive unmet demand for high-performance computing power. This diagram illustrates the concept of compute arbitrage. On the left is the volatile financial return of a megawatt dedicated to mining Bitcoin. On the right is the projected yield of that exact same megawatt when redirected to AI processing. To maintain their margins, HIVE is attempting to pivot from being a pure-play hash rate provider to a landlord for the artificial intelligence boom. The physical execution of this pivot is already underway. In facilities like their Boden, Sweden plant, HIVE is beginning the process of phasing out legacy ASIC crypto miners. They are upgrading these facilities from basic Tier 1 operational standards to Tier 3 data centers capable of hosting enterprise-grade workloads. These Tier 3 upgrades require heavy engineering, including liquid cooling systems and redundant infrastructure to ensure near-constant uptime. Into those upgraded environments go specialized systems, including NVIDIA's H200 and Grace Blackwell rack-scale GPU clusters. These engineering upgrades change the nature of the facility, converting a single-purpose crypto farm into a high-value AI infrastructure asset. The economic logic of this transition is supported by a $220 million GPU contract signed with telecom giant Bell Canada to host Cohere's AI models. This deal centers on sovereign AI, a requirement that domestic data processing remains strictly within Canadian borders and under Canadian control. For HIVE, this contract replaces the unpredictability of Bitcoin mining with the stable cash flow structure of cloud infrastructure, annual recurring revenue, or ARR. This chart maps HIVE's current and projected recurring revenue. They have moved from $35 million in realized ARR to a contracted target of over $100 million, with long-term management goals reaching $660 million. To support that scale, HIVE is planning a 320-megawatt AI Gigafactory in the Toronto corridor, designed to host more than 100,000 GPUs. Between the Bell contract and the Toronto expansion, HIVE is attempting to position its data centers as a key component of Canada's domestic AI infrastructure stack. Building these data centers and purchasing NVIDIA clusters requires a massive amount of upfront capital. This dual-axis chart compares HIVE's revenue against actual profitability. While revenue increased 158%, the company reported a GAAP net loss of $148.4 million. To fund hardware purchases, HIVE issued $115 million in exchangeable senior notes, significantly increasing its debt load. During this capital transition, one notable internal signal appeared. Director Marcus New liquidated over $1.4 million in shares in a single day. HIVE's success depends on generating enough cash flow from these AI contracts to service the debt taken on to buy the hardware before their crypto liabilities mount. We are currently seeing a global race to build the physical and computational foundation of the AI economy. HIVE's strategy relies on the idea that they can convert green electricity into the raw processing power required by foundational AI models. If HIVE can manage its current debt and execute these upgrades, it will demonstrate how legacy mining sites can be repurposed into the industrial infrastructure for AI.